Hi everyone, it's another Monday and it's another not financial advice educational episode of Monday Market Outlook. So last week, the Philippine Stock Exchange ended January up by 3.45%. Now this completes our January trifecta, which gives us great odds for a promising 2023 full year. The last two trading days of January was choppy though, with the PSE overreacting to the anticipated FOMC announcement on Wednesday. So the market pulled back and was able to hold its support at 6,744 before going up the very next day 200 points up back into the 7,000 level, right? So if we look at the PSEI chart here, drawing a Fibonacci level here, it did hold its support very well at the 0.23 Fibonacci level, right? Now looking at the 1 hour chart, we can clearly see that that level here, that dip here, was still good enough to hold its uptrend line and continue the rally. So we plotted that the PSE might move in a range with support level at 6,700 or even as low as 6,750 here. So let's move that line here and draw our projected movement. So looking at how it has moved so far, it's following the trend line that we plotted nicely down to the support level. At this point in time, we just want to see a clearer picture of when the market will bottom before we enter some trades, no? So looking at our stocks here, SSI and URC up by 5 and 6%. But looking at some of the decliners, we have SCC, Apex Mining, UBP, AC, and SM. Remember, this week would be the inclusion of Union Bank and DMC into the index. So a rebalancing would have to happen to the index because most of the weights of the different stocks in the index have to be adjusted. And that adjustment means that some weightings of index stocks have to go down to accommodate UBP and DMC. That's why you're seeing some stocks retreat today. But looking at SCC and Apex and why they're down, we just have to look into the Newcastle Coal Futures chart. No? You see that the coal futures went down dramatically last week. Now, if we plot SCC and DMC into that chart, we can see the close correlation of the Newcastle Coal Futures and the SCC and DMC price action. No? So wait for Newcastle Coal Futures to bottom and find a base, which will also translate to SCC finding a base probably somewhere here at the 29.50 to 29 level. Then you can see if it's a good time to enter. We mentioned that Semirara is still an attractive buy with a 5 PE ratio and a very attractive dividend of around 8 to 9%. So it's still a great defensive stock to hold. Wait for it to bottom out, form a base before considering entering into SCC. Looking at Apex Mining, we can also see that this stock is closely correlated to gold prices. Now, we can see that gold prices went down dramatically last week, which coincides with the movement of Apex. So looking at gold's chart, we can still see that gold is still on a bullish uptrend and has found its base at around 1,864. So expect Apex Mining to bounce back when gold prices have stabilized and slowly climbs up after this healthy retrace. So for this week, while stocks are going down, look for opportunities to buy the dip on some of your favorite stocks. Remember that our support level is here at around 6,740. Watch the index closely. If it reaches this point, most of our stocks would also be reaching a support level, which can be a good entry point for long-term traders. So moving on to the US markets, the S&P 500 and the January up 6.2%. This also completes its January trifecta, giving it perhaps 100% odds of 2023 gains. But not without some choppy road. As expected, the Fed raised policy rate by 25 basis points. And as we mentioned, any small hint of dovishness from the Fed might ignite another rally in the US markets. As soon as Jay Powell said that progress has been made against their fight in inflation, the market went crazy and went up again. However, looking at most of the earnings last week, Apple sales dropped 5%, largest decline in 2016. Amazon reports its first unprofitable year since 2014. We have Alphabet profit falling 34%. Starbucks earnings also down 29%. One of a few good news from blockbuster earnings last week was Meta with their earnings beat and an announcement of stock buybacks worth 6.9 billion. This sent the Meta stock up by 23%. But on Friday, the market got another surprise because non-farm payrolls came in better than expected at 517,000 against an expectation of 185,000. And unemployment rate is down to 3.4%, the lowest unemployment rate in like 54 years. So, I mean, looking at the non-farm payrolls in detail here, while we are hearing a lot of job cuts on Amazon, Apple, etc., remember that they only represent a small portion of the jobs market in the US. No, most of the other sectors in the US are actually adding more jobs. And what we're on the lookout for is a repeat of the 1974 inflation, right? So we're going down here and we want to avoid inflation going up. And as mentioned, one of the causes of inflation in the US is built-in inflation. This built-in inflation is the rise in wages, and as long as more people are employed there, spending will still come in hot and might trigger another inflation if it's not put in check. It may not be a surprise if the Fed increases the frequency of rate hike or even increases the rate hike from 25 basis points to even 50 basis points in March. But looking at the S&P 500 chart, look at those rejection weeks. 2 days rejecting the 4,195 level. Now, let's delete this trend line because it's no longer holding, right? So we can see that the S&P 500 is at a level where it's hit some strong resistances at 4,200. If we look at the 30-minute chart here, we can plot a price channel along this line here. So we can see that the S&P 500 has hit the upper band of the price channel and may trend down this week to a support level of around 4,070. Look at the S&P 500 to hit 4,070 or 4,060 and see if that support holds. So for this week, it's really just wait and see for traders and anticipating a bottom for both markets, both US and Philippine markets, and see if we can do some bargain hunting at the end of the week. Now, in the meantime, I hope you found this episode useful. Please like this video and subscribe to the channel for weekly updates. Good luck on your trades. Please manage your risk accordingly, and I'll see you again next week.